Today, I'm sitting down with Matt Zimberg, the CEO of Optimus Futures. Matt has been in the trading trenches for 30 years, and he's seen the industry evolve from phone-in orders and handwritten paper tickets to the electronic platform wars we're living in right now. But what I like about Matt is he doesn't sell the fantasy. He talks about what trading really is, decision-making under pressure, and how your psychology can wreck you faster than any chart pattern. So if you've ever overtraded, revenge traded, or felt totally smoked by decision fatigue, you're going to get a lot out of this. Here's my conversation with Matt.
All right, everybody. I'm here with Matt Zimberg, who is the CEO of Optimus Futures. Matt, thanks so much for being with us today.
Thank you so much for having me.
My pleasure.
Just as an intro, I'm the head of Optimus Futures. Because we're going to talk a lot about trading and I'm licensed, I just want to throw in the legal disclaimer that I have to. There's a substantial risk of loss in futures trading. Past performance is not indicative of future results. And just in general, be careful when you trade futures. So
always important to say that up front. So I'm super curious about your views on trading. But before we get into that, I really love to hear about your origin story, like how you got into trading. What was the spark for you? Tell us about your journey.
So the early journey starts in the early 80s when I saw my father actually having huge graph papers. I don't know if your father ever used it. It was orange papers, and there was no charting. There was no internet at the time. So he used to chart everything manually. So he used to give me a paper and basically with the ruler show me how every inch, to do it up or down. So he started following trends that way. That was my early introduction into the markets. And my father is not in the financial business, but he was just doing it as a trader on the side. So that was the first time I saw it. I really got into
trading.
He was just trading equities, equities, just stocks. Later on, right after my college, I took economics and finance and business admin. In college, I can't say that I have a real direction at the time. It was the popular thing to take, how you get into college and what school, what should I take? And after that, I kind of rotated around between both retail and institutional business. And I would say probably from my mid-20s, I got licensed and I started in retail. So I've been doing this for 30 years. I've seen a lot. I was just a year or two into my career as a licensed broker. Globex was launched. I played a lot of roles in this industry. That's one thing I want to say. That since I started, so I was a broker, I was a risk manager, I was in business development, really saw every single side of the business before I established Optimus Futures. And that background gave me kind of the push to do that. One thing I want to tell you is, when I established Optimus Futures, it's not like I really wanted to, be in business. It's not like I wanted to open my own in the early days of my career. But you know how it goes. At some point, you're like, you know what? I want to do things my way, establish it my way. And Optimus Futures were born, and here we are today. By the way, I just want to say thank you for what you're doing for the community. I really, education, number one, is important. Your product, the computers, the laptops, you need good infrastructure to trade. I see a lot of people. I know this is not the topic of our conversation today, but I still have to say that, a lot of traders, don't use the right equipment. It causes latency, breakdowns, and everything else. And so I always say, when you get into business, the infrastructure is really, really important. Buy yourself a good computer, get good equipment, you're selling good stuff. So I hope that people realize that over time that it is a business. So.
Oh, thanks for the plug. I definitely appreciate that. I didn't realize you've been in the business for so long. Globex, for those who don't know, I think that's the and correct me if I'm wrong or fill in some detail. That's the electronic trading that goes on overnight in the futures markets.
Globex started as the overnight market. Now Globex is just a pure technology that drives the CME. Now,
Oh, okay.
I want to tell you, today people used to online, but as a broker, when I started, we had a phone system with a button to each pit. And
Yes.
it was a lot of manual, a lot of, I would say, verbal manual process involved. And all of a sudden you go into the net and you click and you get a fill. I know for in today's world, it doesn't seem like a miracle, but for somebody who had to go back and forth to get a price for a customer for 15 minutes, like when it came, it was like wow, the haha moment. And so it really changed everything. CME Globex technology, there's not a lot of people who have it. It's really good technology. And it really revolutionized the industry. This is how discount trading started, online trading, the developments of platform, that competitive landscape. So it did good things. So yeah, I was there from pretty much the beginning. And like I said, when I clicked the first time and I got a fill, it was just like, wow. I don't have to call a floor and talk to a broker, and then he tells me that he changed the price. And I have to tell the customer. It was exactly what the industry needed. So it was at the right place at the right time.
I just need to fill in some even more of that detail a little bit, because my experience goes back to 1987. When I graduated high school, I started on the floor of the New York Mercantile Exchange. And so when you press that button to dial down to the floor, the guy on the other end had to write out a ticket and either hand it to a runner who would have to find his broker among that mosh pit that was the crude oil pit or the heating oil pit on the NYMEX, or he would stand on the desk of his booth and start with the hand signals to his broker on what to do. So there was a lot going on the other side of that call as well. And when I became a stockbroker in the early 90s, I was still writing tickets by hand and running them up to a window where they were wired up. So I totally agree. The fact that we could place orders electronically, which for me as a stockbroker didn't happen until like 97, 98, was I able to actually put something in electronically. And I know for futures, it was even later than that. When did Globex start exactly?
I think it was around 23 years ago.
Wow.
Something like that it was somewhere in the early 2000s,
Wow.
No, you know what? I'm sorry. It could be even more. It could be even in the late 90s that Globex started. 2000, late, somewhere around there. Look, I mean, the platforms that at the time, because of Globex, the online systems, had to progress towards working with the Globex, because many times the original platforms were online. People clicked it in, but there was still a guy who had to go to a system, place the trade, go back to the system and give it. It wasn't direct
human
market access. So there was a human intervention in the early part until it went DMA, direct market access.
Right.
So it also took some time to progress and bring the platforms and everything else. One thing I have to tell you that, like the systems that we used at the time, they were very, very robust, actually. They didn't have the charting and all the capabilities that have today, but they were robust, and some of them were done with good engineering, but, better and better came, and, the old ones kind of, faded away, and today you have very advanced one and an extremely competitive landscape in the platforms, and I think the next generation of platforms will definitely integrate AI. There will be a lot of automation, AI feedback, and things like that. So the ones who are staying on top of those are the ones that will, move forward and get the crowds to trade on them.
So Matt, in your opinion, how do you define trading?
That's a good question. So when I talk about trading, I don't like to talk about the word markets. I want to isolate markets and trading, altogether. And the way I look at it is it's a sequence of decision making in an uncertain environment that can either bring to positive or negative results. That's how I like to define it, and I think people who get into trading should understand that they're really getting into the business of decision making. If they're traders, investors, I don't consider them in this category, although it's the same business, but not the same frequent decision making. So it's frequent decision making that you have to live with, that you have to understand that it's a business of decision making, and most of your decisions will be wrong. So and you have to live with the fact that you have to kind of, for a lack of a better word, scrape a lot of negative P&L until you get to a positive P&L. And if you really understand it's a business of decision making, then you want to minimize on your decision making. You want to develop a method. Then you say, okay, what problem am I trying to solve with my decision making when it comes to trading, and basically adopt a method from there. So that's my definition.
Yeah, that's a very unique definition, and I like it a lot because it's not focused on the outcome. It's not focused on it's a way to make money. It's really like the truth of how trading works. It's especially for day trading, because it's easy to get decision fatigue. So have you ever taken your wife to like Cheesecake Factory or any of these restaurants where the menu is like 15 pages long?
I went once until I saw the salad is 9,000 calories, and I never went again. And I never went again. But I know, but I know the concept. Yes. The one thing I would like to add just to why I have a different perspective on trading is because I think people get fascinated with markets and gains and a lot of noise around in the financial markets. So they really forget to understand the core of the business. What is the core of the business? What's behind the window display? And behind the window display is decision making. So this is and you have to become an extremely good decision maker in this business.
I guess what I was trying to get was to the concept of decision fatigue. And I just know from my own experience trading that if I'm very active, by like lunchtime, I could be mentally exhausted just from decision fatigue, because having to make decisions can be exhausting. It's like I hate going to the mall.
Right. Well, you're absolutely right. There's no cure for everything in trading, but one thing that I found that really helps is consciousness. I think, when we talk about trading, you really have to understand yourself and what you feel. And if you feel that fatigue, if you are conscious that you're saying, what, I'm tired and my decision making is being affected, maybe I should stop. So consciousness plays a huge role. It really leads me to the, where we can discuss this now or a little later, but the whole idea of, when you are trading, right? And the decisions that you take in trading, and you think this is you who is basically trading, and it's really your chemicals. And you really have to be very, very conscious of your brains and actually admit to yourself, I'm losing a little bit of control here. It's not me trading, it's my chemicals. And this is when you stop. What I mean by that is that, like sometimes people will say, why did I trade this day? I overtraded and everything else. Prices trigger behavior. Prices trigger behavior. And the idea is that you shouldn't be trigger happy. Right. And this is where I'm talking about consciousness comes in. You're conscious of your decision making. This is not easy, by the way.
Could you call like what you're saying with chemicals? You're talking about your emotions, how your brain chemicals are triggering your emotions, and you're
correct
kind of overriding your logical decision making skills.
Absolutely. You phrased it even better. You're right. Chemicals lead to behavior. It's your behavior that you have to be conscious of, and stop yourself. 90% of the time, you have to stop yourself. Frequent decision making. Frequent decision making is not good. I think that, you have to minimize your decision making in trading. And this is when people say trade only when the method tells you to trade. So I'll give you an example that some traders, where they make the mistake. For example, they're waiting for a certain setup and they say to themselves, oh, this setup is going to happen anyway, might as well enter early. And this is where they use their intuition. So this is where you have to catch yourself. Wait, my method didn't occur. I'm just being somehow greedy here. Maybe I should wait for the, setup to occur. And then I'll make my decision from there. But, this is where greed comes in. And by the way, greed, when I'm talking about greed, it's a very, very subtle emotion. It's not, people talk about greed as if it's somebody who wants to, it's a very subtle emotion. It can be even for $50 or $10 or, trading early. So this is where you have to catch yourself.
Could you also call greed the need to be right? I think human beings, in our society especially, there's this strong need to be right about things and be heard and be right. And people need to prove themselves.
This is where ego hurts you. There's a lot of things. Ego could be amazing in sales, for example, for a salesman. It shows confidence. People might want to do business with you. You bring ego into trading, you're done. And so you're done. Like if you have, this is where you have to be extremely humble. And yes, I don't know if I correlate the need to be right with greed, but I would say that if somebody, goes into a sequence of losses and trying to recover, this is where they really have to catch themselves. There's two situations that, traders have to be extremely careful. One is when they lose money, and the second one is when they make a lot of money. The ones who lose a lot of money, trying to recover leads to more losses. The ones who make a lot of money sometimes through a trade get overconfident, and it leads to the same thing. You actually see the biggest losses occur after the biggest gains in trading. And it's just that ego, that says, okay, I got this, I got this. And I always say traders, you're just as good as your last day. You're just as good as your last day. That's it, like you're a trader every single day from the beginning. Markets change, dynamics change. So yes, the need to be right manifests itself in so many ways. Like somebody has, for example, some sort of a method that they paid for. Let's say somebody had a mentor, right? And the system doesn't work. Let's say the mentor, let's say for lack of experience, taught them something that's not really maybe viable or should be applied differently. I'm not accusing anybody of any mentors out there of anything, but they did it.
See what's on YouTube. See what's on YouTube. So
exactly, it's just everybody's a mentor and a guru nowadays. So you go and you apply the system again and again and again. You might have paid for it, so you have skin in the game. And this is where, you want to be right with the system, but it doesn't work. So you're right. Greed can manifest itself in one of the forms, in potentially, in trying to recover or things like that. And you say, I got to make my money back. And every time you catch yourself saying a statement like that, then you have to understand that it has nothing to do with the markets or the method. This is exactly where you catch yourself and say, you know what, I should stop. One day does not make you a trader, not a week and not a month. It's years and years and years that make you a trader, right? That's what it is. And so people sometimes forget that. They just judge themselves too harshly. They statistically have to look at their behavior over a long period of time. Given that, I understand that nobody has endless amounts of capital to experiment. But nevertheless, that's what it takes. You have to take a statistical approach over the long term.
So how much of trading you think is psychological versus technical?
I would say it like this. You can have one without the other. That's what I would say. They can't, they don't live in two separate worlds. They have to live with one another. So the trading side, the technical side, you gotta have a method. You have to define the method, and you have to define what problem are you trying to solve. Number one, what is the problem? Are you trying to solve support and resistance areas? Are you trying to solve the problem of something breaking out and having a run, or breaking down and having a run? So, you first have to decide on what problem are you solving. And after that, the application of it, a lot of it is psychological, is waiting for that setup, is sitting there and waiting for that setup. So I don't think they live in two separate worlds. They need one another. There's the psychology of trading is so deep that, like you said, a lot of YouTubers and TikTokers and Instagram, they talk about you have to be disciplined. They don't understand what it really means. It sounds good on the surface, but to get to that point, it takes a long time, because you have to make mistakes. You don't have to make mistakes. You will naturally make mistakes, and this is where you catch yourself, and this is what you learn the most. Eddie, that in trading and in business, you learn most when the times are hard. This is what, it's just, and so that's, and trading is the same thing. There will be a period that is not a good period. And this is the period where you have to really study the most, because people tend to, on a winning day, just, close the computer and say, I got this, and right. Just watch TV. In fact, what they should do on a winning day is exactly what they should do on a losing day. They should learn what they did right. How did I apply myself today in the right way? What did I do to get to those gains? And when you have a losing day, you do the same thing. I always used to say, and some people don't agree with that on the days that you make money, you actually analyze more. Because what you want to do is program your brain to think positive and repetitive patterns on positive days. But people do the opposite. People have amazing days, and I got this. And on the winning days, they sit 5 hours and analyze it. So they're programming their brains only to analyze during bad times. And that's not a good thing. You have to do both equally, on your gains and to realize what I've done right and what I've done wrong.
What types of people are actually able to do that and be able to, really last trading?
I would say the first habit, make your bed. Make your bed. Look around your room. If it's a mess, clean it. If you work in a messy environment and you're a messy person, clean your environment, first of all. Become disciplined that way. The people who I believe have the strength not the strength, I would say the skill to become good traders are ones that understand risk and were engaged in some sort of a risk taking, before. It's really, especially in the futures markets are very leveraged. You need a very strong psychology. Equities, I would say, they don't have as much. So people who are not risk averse, maybe futures is not for them. It's for somebody who is, can accept risk because it's trading with leverage. But I would say that, people that are used to risk, people who had businesses before, people who understand statistical odds. I would give you an example. If somebody told me, where would you put your money? Would you put your money on somebody who was a Navy SEAL and taught trading, or a finance student who taught trading? I'll go for the Navy SEAL, because he knows that to get to the target, you're going to go through hell, and you got to be willing to go through hell to get to the target. And in trading, people, unfortunately, today only talk about rewards. They don't talk about the path to this reward that is extremely hard. So I would say people who came from a very structured business, people who go, I'm not saying that it's guaranteed they'll be successful, but people who go to the gym all the time and exercise, Navy people, or anybody that has some sort of a structure in his life, and can apply that structure. This is what trading is built for. It's not built for those who think that they can come with some sort of a random decision making and succeed in this market. That's not going to work. So
yeah, it's funny you say that, because you're like the third guest I've had on in a row who says military people, pilots do very, very well. And then there's like certain folks who really struggle. For example, engineers don't seem to do very well because they have a tendency to overanalyze and try to take in way too many variables.
I think so. So it's interesting that you're saying about engineers. Engineers are used to linear logic. There's a box. Step A leads to step B, B leads to C, C leads to D. And they need that structure in engineering. It's got to work that way. So when they do B, they know they know that the result will be C, and C will lead to D. Markets are not linear. You know, like they are the number one people would say, I don't understand. I followed the setup and I lost money. I did exactly what the setup told me to do. I statistically did it, and it's just something that they cannot comprehend. You know what's interesting about in general? There are certain strengths that you can have in certain professions, but they're a weakness in the marketplace. And engineering is one of them because it's used to linear thinking. Accounting could potentially be one of those too. Although they work with numbers, everything adds up at the end of the day. In trading, sometimes it adds up and sometimes it doesn't. Like you had a setup, you know, in the mini S&P, and in your eyes, it was a perfect setup. Exactly at the same time that you executed the trade, a hedge fund in Japan decided to just liquidate everything towards the end of the year. And instead of going long, now the market is crashing and you got stopped out. And you're sitting there and you're scratching your head and you're like, I don't understand. I followed this method. Remember, I always tell traders, there's gazillion traders in the marketplace with different purposes. Some are long-term, some are short-term, some are hedgers, some are speculators. You're encountering all of them. In the intersection of encountering all of them, you have to keep in mind that some trades do not work out. And when this setup doesn't work out, it doesn't mean that your system is bad. It means that this trade did not work out. But traders would do 2-3 trades, losing those trades, and they keep on refining their method. You know, they're going
or
back
looking for the next strategy. We see that a lot too.
You know, I see it many times amongst programmers who are driven towards automation. They think if they'll automate their system, you know, so they work 3 months, they learn the code, they automated. The first day is losing, then they stop trading, and another 6 months they tweak the system. Programmers are known to do that, you know, and it's very rare that somebody, you know, would lead to who does that type of pattern behavior would find the holy grail, because they change all the time and they don't understand statistical odds. But, you know,
why do you think so many really smart people and really motivated people still struggle to figure out trading? Because I mean, you've seen the statistics, like especially in futures, like 90% of folks that blow up accounts, they can't do it. They give up.
I think it's conservative. Well, like I said, you know, there's certain professions like sales, marketing, and things like that, you know, egos might help. It doesn't help in the marketplace. Accounting, engineers that we discussed, you know, they have weaknesses. But specifically, I think in general, to answer your question in general, I really don't think people understand what they're getting into, because, you know, they're getting into it because they want to make money. What they don't understand, and of course you want to make money, but what they don't understand and they fail to understand, what is money in trading? Money in trading is the last thing. It's the last thing on the equation, because it's all your preparation, you know, for that outcome. What are you doing in preparation for that outcome to potentially make money? You know, how did you prepare yourself? That's their main goal. They don't understand. Here's the word I'm specifically looking for. money is a byproduct of good trading. It's a byproduct. So it's not, the money comes as a result of discipline, as a result of studying the markets, but that's not what they're getting into it. That's not the reason they're getting into it. They're getting into the gain. So they're going a little bit backwards. They're like, I want to make this much. So for example, they will come and say things, I'm not greedy. I just want to make $200 a day, which is the epitome of greed, to come and say how much exactly the market should give you. And then they work backwards, to say, okay, how does it work? Instead of work on the method, identify what problem you're trying to solve, backtest this method, start small, start infrequent, start with one contract, see the results, and you tweak performance. If it's important to backtest it. So a lot of people don't backtest it. So what does backtesting do? Backtesting allows you to see the potential fluctuations in your account. So for example, I can come and tell you, look, let's say that I told you that, I made 20% this year. I opened a $10,000 account in futures and I made 20%, right? But what they don't talk about, or in general, or all those gurus, is what happened in the account up until that point. Maybe the account went to 6,000 first. Maybe it went to 7,000. Maybe it had a straight line up, which is almost impossible, but they don't talk about what's happening. So the people, just to answer your question directly, I think majority of people do not understand what they're getting into, and the references that they take from their own business and their own life that they bring into trading often misleads them. So they need to understand what trading is from the get-go, what potentially they bringing in that could be a weakness into the game, and then identify potentially a method that suits them.
That's a really big deal. Besides that, besides what you just said, which is not realizing what you're getting into and not really understanding what trading is, what are the other, say, 2 or 3 big mistakes you see traders make over and over again?
I would say overtrading is one. I would say frequent decision making, emotional decision making, trying to recover funds that you lost. When you make money, that's
Isn't
huge.
That's where I think that's trying to recover is where the revenge trading and the overtrading comes from.
It's exactly it. It's trying to recover. It's like if you
always
trade
risk too much when you're trying to make it back. You always take a bigger risk than you normally would when I got to get it back mode.
A lot of people become a little bit desensitized to all the risk warnings, but when they tell you you should trade your risk capital, there's something behind it. Because if you're not trading your risk capital, especially in futures, what happens is that you will apply a psychology of desperation, of I need to make money, right? So you have to trade risk capital. And then, I'm not saying that just because it's risk capital, you should treat it haphazardly, but it's just, you're not desperate. If you come to the market and some guru sold you on the idea that you put $5,000 in it, and you come with the belief that now you can pay rent, and all of a sudden you're losing money and you can't pay rent, then essentially, you'll pay a very, very dear price, because now you're not trading a method, you're trading your problems. So a lot of people trade their reality in the market. You trade your actual reality in the marketplace. Your reality is reflected in the decisions that you make. Don't bring your reality into the market. The market doesn't care about you. It's all Eddie, over the years, I talk to customers that, they don't understand the dynamics of the market. So they fall into the category of the conspiracy theorists, that people hunt their stops, and people, go after them, and
market's rigged.
The market's rigged, and I say to them, the market just moves. The market moves. If the volatility of the market is, 20 points on the S&P and you put a 2-point stop, I'm sorry, you're going to get stopped out. Maybe wait for a better day that it fits your volatility. I know people kind of find it weird that, that I say those things, don't trade a lot, and, not frequent decision making as a broker. But I really, truly want people, that come to Optimus Futures, to stay with Optimus Futures. I don't want them to be a statistic. I want them to be somebody who's successful. I know I can't change the reality for everyone, but at least I talk about those things, as if I, from a standpoint of really helping someone to say, hey, this is what you should do. Trade slowly, take your time, but also the one thing that I also want to bring into the equation is the whole idea of paper trading. People think that if they go on paper trading for 6 months or a year, it will make them a better trader. It's not. And I don't laugh at those people who say that, but I always approach it with cynicism. The people say, oh, I treat it like a real account. You can't. When there's real money on the table and it's not demo chips, this is where you learn the most about your personality. And you know what you learn a lot? The size that you can have. So a lot of amateurs, they'll be, for example, when I say amateurs, beginners, not, don't want to refer to them as not intelligent, as amateurs sometimes refer to, but beginners, they think that they can scale from 1 contract to 5 contracts to 10 contracts to 15 contracts. No, they can't. They really have to find the magical spot. And I'm saying maybe magical is not the right word, but the right psychological spot, knowing their size. Don't think that if you're trading 1 contract of E-mini S&P and you're doing fine, you can all of a sudden trade 10 the next day. It will affect your psychology. So you have to build your position slowly to the point that you say, you know what? Every time I trade, for example, over 5 contracts or maybe over 50 micros, it just doesn't work. And the reason it doesn't work is because your risk tolerance doesn't allow you to do that. So finding that sweet spot of what actual leverage you should use in futures, or for that matter, any asset class, in stocks or in options or anything, what is that ideal spot for my psychology? And I think just accept it. Accept it, and that's it. If you can't do more than 5 E-minis, of course you want to do 10 and 15 and everything, but if 5 is that, if that's what, at least you can say I'm successful. I just get to the point that you can say that you're successful. Even if you break even in your first year, I have to admit, for me, it's a success. If you manage to break even, I know a lot of people don't want to hear it. They're like, a whole year just to break even.
Break-even trader is an accomplishment.
It's an accomplishment. Agree. Yeah. It's it's step 1. It's what I look at it as step 1. You're doing something right, and now you can improve from here.
Very, very, very important point. And about scaling up, I mean, you have to find your own threshold, because there's that point, and I've gotten caught in it, where your fight or flight response, which is an emotional response by your amygdala, which triggers all those chemicals, just overreacts because your fear of things going against you overrides all your logical decision making. So, I mean, everybody has to find that threshold where they can say, okay, no matter what happens, even though I'm going to follow my system and my risk on this does not allow me to beat myself up or be ultra triggered that I'm like paralyzed the next day or I'm spiraling out of control. Does that make sense?
It's 100%. You're 100% right, and I'll tell you why you're right. If you start trading, okay, in size that outside of your risk tolerance, which a lot of people do, they trade size outside of their risk tolerance. What happens is it's very hard for them to go psychologically to a smaller amount because they're always in a state of recovery. So they start with, 20 contracts, let's say, on the mini S&P.
Trying to make back a loss.
Yeah, they're trying to make, and then I would come in and I would say, well, listen, maybe you should remove from 20 to 10. And the response would be typically when I make my money back.
Interesting. That's the mistake.
That's the mistake. You cannot start trading, by the way, in any game of odds and numbers and psychology, it applies. It's like walking, I'm not advocating anybody to gamble, but just to bring something from the
Well,
gambling
it is
world.
pretty well accepted in our society now. I mean, it's almost like we're being encouraged to gamble with, sports betting, and now they're bringing on these predictive
Predictive
markets,
markets, yeah.
which is just like you can just. I mean, they've been trading weather futures for a long time. It's incredible what you can bet on these days. But go ahead. Sorry.
No, it's fine.
I'm on the fence. I don't know. I think people should have the ability to do what they want. But the problem is that, yeah, I mean, we can get very psychological. I mean,
Yeah, I mean,
philosophical there and political even. But
yeah, I mean,
I don't.
there's a lot of politics behind it.
Yeah.
I leave it to the regulators to decide what's legitimate, what's not legitimate,
Or
and how
what's
they
even
see it.
like morally okay, you know?
Yeah, I'd leave to somebody else, but I do want to say, like, to bring in an example from the gambling world. For example, if you're playing, I don't know, poker for the first time, and you start betting, where the minimum bet is $300 as opposed to a $5, like this is, and you're a beginner. And you lose a lot of money, and so all of a sudden they say, no, you got to go to the table with the $5. And you're like, no, I need to stay here because I got to
right.
recover at this one. So, the competition between brokers for day trading margins have become huge, right? So people always want to ask, and we don't know in the brokerage firm who's experienced, who's not experienced, but I always say to beginners, start with a minimum. The one contract that I like, which is, it's that people could potentially start with, are the micro futures, right? So the micro futures, like, just trade one, see how it goes. If you can build on it, sure, you can do 2, 3, 5, 10, up to you, up to the trader. I mean, but at least along the way they discover the risk tolerance and the right size for them.
Right. So tell us a bit about Optimus Futures. There's a big pond now of all these futures brokers, and you've carved out a niche for yourself. What do you guys do that makes you special?
That's a good question, and you know that every broker thinks they're special.
Of course, but
clearly
you know a lot about trading. You know a lot about trading, and we've touched on, I think, the most important aspect of trading, and in my opinion, it's like 90% of trading, and that's psychology. And so I think you already bring that to the table. You also just mentioned that you encourage people to go small. You don't tell people to fully leverage and to trade as big as they can, which is, not necessarily great for your business. You're doing the right thing. So I see that so far. But tell me what your motivation is. What was your motivation for starting the business, and what makes you guys special?
So I'm going to tell you to tell people the reality of trading is a business decision, because you end up with customers who potentially, I don't talk to all the customers, and not all my customers will see this podcast, which I think they should. But the reason that we have this attitude is because if we can change people's behavior and patterns and expectations and teach them better, it's a better decision making for the business. You will have customer longer term. Everybody talks about in the marketing sense of lifetime value. How long does the customer stays with you? How much he spends? I'm trying to bring out, to break all those norms. I don't want to hear about the 3 months and the 6 months. Again, there's statistics that sometimes I can't change. But I'm like, I want to bring you in. You're an investment for the next 10 years, if, let's say, there's a trader, Mike, I would say, Mike, you're an investment for me for the next 10 years. I don't want you to be with me for 3 months. So if we start right, if you get the right guidance, it's a business decision. As far as what separates us, Eddie, I'll tell you this. A lot of brokers, when you ask them, what separates you, they all say the same thing, which is customer service, And I'm like, and I laugh when I hear that. And I don't laugh because I underestimate customer service. But, what I try to do is to add another word to customer service: competent customer service. So, you can
Not
be
a chatbot.
Yeah, you can be a very nice guy on the phone, and maybe some brokers are even nicer than me, and I'm sure they are. But what I do with my staff and what I encourage them is to be really competent at what they do. So we try to keep on top of technologies, new platforms, who's the new player, what do customers want, how they want their connections. We hear customers' feedback. Sometimes the feedback is great, which we're like, okay, just like a good trader takes input and say, we're doing something right, let's capitalize on it. But it's also important to hear customers who complain, because the customers who complain, the way I look at it, sometimes they're in pain. And because they're in pain, they want to do business with you. They want to, but this thing is just there. The way I look at it philosophically is like, the customer is actually not complaining, but he's saying something like, help me get there. Help me, and we listen to them and we try to make the process better and better. It's very hard on the retail side. I have to admit, some here and there we fall into a customer that it's impossible to communicate. They don't.
You can't make everybody.
Yeah, it's just
no matter how
right.
good you are.
Correct.
People, like we were talking about with trading, people bring their own stories and their own head trash and their own garbage with them, projected onto you.
So sometimes it's unfortunate. A guy can go to 2-3 brokers and they haven't been great, and he brings all this anger to us, and we tell him, hey, listen, we're new and we're trying. So just to, answer your question directly, what I try to do is really to be competent at what we do. Competent in our customer service, competent in how we deliver the technology, competent in how we set up customers. We always keep on improving the process. The theory is that, that we have, it's not a theory, but the philosophy that we have at Optimus Futures is that what are people repeating and saying? What is the repetitive feedback? The good and the bad. And try to make the good even better and try to address all the shortcomings, because it's important to listen to them as well.
Absolutely. Absolutely. And it can be hard, as a business owner, to listen to negative feedback. But I think that's what makes a business a great business, when they're able to use that to their advantage and turn negatives into positives. What's the best place for people to find you guys?
So they just go to the website, to optimusfutures.com. We offer our own platforms, which, Optimus Flow, for those who want to do order flow, Optimus Web, mobile. But we also work with third-party providers. We work with TradingView. We have a lot of TradingView customers. We have a lot of Bookmap customers, Sierra Charts, third-party platforms. Although we try to minimize the offerings on the site to our platforms, because most people just want some sort of a software and a free software, which we give them. But some people come in with specific demands, and we're very agnostic when it comes to that. So if somebody comes and says, I want to trade on TradingView, we don't try to convince them to go TradingView it is. I want Bookmap, I want Sierra, I want Rhythmic, I want a CQG platform, whatever you want, CTS, whatever you need. This is what we're going to set up with. Some of them have questions. Many customers have questions because they don't know what technology to use. And we ask them, for example, most of the time, are you at home or anything? Brings me back to your products, like if they have, a lot of those, not all trading platforms are light on resources.
Right.
And they need a really, really good computer. If it's your business, buy yourself a solid laptop, buy yourself a solid computer, and don't trade with Wi-Fi. For the love of God, plug it in. Plug in your computer hardcore.
Yeah.
Hardwire.
Another mistake, at least I see on my end, is browser-based platforms are fine. You can load up whatever, I think TradingView has a browser-based version.
Correct.
A lot of these crypto platforms are 100% browser-based. The issue is that your browser can't offer as many of the resources as a desktop app can. So if you're just looking at prices and you're putting in an occasional like swing trade with a limit, limit orders, stuff like that's fine. No problem. But if you're actively day trading and trying to scalp, browser base is definitely a problem. And then compound that with Wi-Fi, that's a huge problem. I mean, the latency with Wi-Fi, people don't realize Wi-Fi only sends signal in one direction. It doesn't, if you're plugged in with an Ethernet cable, you have bi-directional information flow. Whatever orders you're sending or whatever information, that happens at the same time. And you're not competing for bandwidth with everyone else in the house.
That's interesting.
Your kids
I didn't know that. That's so interesting. I didn't know it's one way. I just know Wi-Fi gets interrupted. Somebody can walk in with a phone. Somebody opens a refrigerator right beside the router, then all of a sudden some magnetic field. And
your neighbor.
Eddie, actually, this is a great opportunity to actually educate people on huge number of browsers that are being opened. So sometimes they use a browser based, and sometimes they keep on all those tabs open. They're like, I'll get to it later. I'll read it later. Nobody reads anything later.
Right.
But there's sometimes we help technically and we ask people, how many browsers do you have open? Some people have, I'm not exaggerating, 50 to 100 browsers.
Sure.
And they consume data. They also consume data, right?
They use data. They use RAM. They're competing for resources in the background. And there's ways to optimize your computer to avoid that. I mean, there's certain things we have to use browsers for, obviously. But when it comes to trading, you really just want to stay away from browser-based. If you can, I mean, if you can stay away from a browser-based trading app, you don't want to be day trading on that. But just getting back to Optimus Futures, you guys are purely a connection to the markets?
Yes.
And you said you have your own platform as well.
So we white label known technologies out there. We're not programmers. We do not have the luxury of sitting and building platforms. We go to people who specialize in it. We try before a launch of a platform to stress test it with demo, and then stress test it potentially with live capital, and see how it works and to give feedback to the developers. But I need to tell you, it doesn't matter how much testing one can do or want to do. The reality is that, only when you bring people en masse to a platform, only then you see, if they can handle the mass of people,
right,
if their servers can do it, the quality of the API. I'm not going to name anyone out there, but, but one API is very different from, it's not the same. There's a quality to an API, integration and risk. And does the API connect, disconnect by mistake, and reconnects? We saw APIs that just don't automatically reconnect on certain platforms. So we try to avoid that as well. When we come across that, we can tell pretty fast, whether a system can handle things or not. This is because of our experience and the number of users that we have. But I'll tell you this. I wish I could tell you there was a platform or an API that doesn't go down. It's a matter of time. It's always just way too many servers, components. So, when traders open an account, they should always find out, what's the 24-hour desk? What's the procedure to call the 24-hour desk? Not to panic, because if something goes down, them and all their cousins are going to call the same desk. So it's important to wait in line. I know it's inconvenient, but, as you get through that, you liquidate and you're calm and everything else. And, and hopefully things will restore after. Especially, I have to say, when people call trade desks during emergency times, the trade desk is not there for stories. I think the market is going up or I think it's going down. This is a decision-making moment. He wants an order. He's not there to discuss with you market analysis. That's not his job. Many of them don't even know the markets. They're just pure technical execution. They don't follow it. So they only want to do. So it's important to develop procedures for those times. But again, good equipment, good connection goes a long way.
Awesome. And so you provide the connection.
Correct.
And the customer service.
And the competent customer service. We
and the
hope it's
competent customer service.
Right.
So, who's your best customer?
In terms
In other
of
words, who's the right person for Optimus Futures?
just a nice person. All I'm asking you is just be nice. That's, I mean, listen, the reality is we're dealing with people, finances and money. It's very sensitive. Some of them get emotional. Some of them,
I know.
Sadly become angry.
I have the same experience on our tech support desk. People are trading, something gets hosed up. They want to, think I have a gremlin that lives inside their computer that purposely messed them up.
I know. It's just that, because people have to blame something or someone for the scenario, right? Somebody has that. You cannot live in a world where there's a problem and you don't correlate it to this. But what I would say customers do not understand is that brokers don't control 90% of what is provided after, when it comes to technology. Like the API belongs to an API company.
Most people don't even know what an API is. They just don't even know what that means.
Right. So the API is basically for the, just for the folks out there, it's the line that connects between your computer and the exchange, regardless of the platform that you have. Sometimes the platform malfunction, it's the server, but it's always, they think it's the broker, and we try to tell them it's not us, right, that messed it up. And many times I would say it's their computer setup. It's many times the computer that they're on. We have people who just don't close their computer. Don't close it. Right. Leave it on all the time.
Worst thing they don't.
Yeah, they don't restart it. It's there for months.
And then they don't update.
Weeks.
They don't put on updates and things like that too.
Correct.
It's weeks, months. People who are sophisticated traders, it's you wouldn't even believe.
I know.
We offer lifetime tech support, so I've heard it all. But then there's always a new one. There's always a new story. But it's true. I mean, what you're saying is absolutely right.
Yeah, I just say, we're looking for somebody who's nice. People think that I can't speak on behalf of other brokers, but what I try to do at Optimus is to have a lot of traders. We try to bring on as much as we possibly can. And, so my business is not concentrated with one or two customers, but it's just distributed between many customers. So, we have very low barriers to come in. We have, if somebody wants to trade micros, it's only $500 to come in. And we tell them, just follow the process. If you have issues along the way, we will help you. We have a support email. We have a forum. We have somebody's live. Yeah. We just...
a lot of these newer... try to get support at Robinhood. You can't really get support. You get chat, and half of it's a bot. And if you do get a person, they have no clue what you're really talking about. There's a lot of platforms where you're not even going to get anybody on the phone.
It's, I know that what they do is access to the markets. A lot of my competitors offer access to the markets. But a lot of companies out there are first and foremost fintech. It's a fintech company. Trading is a byproduct of what they do. But first and foremost, it's fintech. And in the fintech world, it's not the traditional brokerage. It's just they're looking for very specific people. And they've done an amazing way of onboarding people. You open an account, 5 minutes later, you're trading. Fine. Now the questions start.
Now what happens?
Now the questions start. How do I do this? What's a point value here? How do I do this? So, it's very similar to somebody who buys an expensive car. Most of the research is done after the fact because they want to justify their purchase. So somebody buys a Bentley just saying, the same day he brings it home, he looks at the car, he loves it, but then he goes on the internet. Benefits of Bentley, So now you can justify to your friends why you did it. I think when it comes to fintech, people actually do the same thing. I want to get into futures They find a fintech company, they go in there. Now the questions start. By the way, this is how many find their way to Optimus. Because once they do the research after, they all of a sudden see how much resources we have put into education. Like they'll start saying, what's a day trading margin? What's a margin? And a broker for day trading margin. And then, once they get into the future space, they will most likely will come across Optimus.
That's awesome. Matt, I want to thank you so much for coming out today. Really interesting. You certainly bring a lot of genuine experience and understanding of what it means to be a trader. And it sounds like Optimus really offers something unique. So, Matt, thanks again for coming out. And again, if people want to check out Optimus Futures, I'm going to put a link in the description. Check it out. They have something special for you. Thanks, Matt.
Thank you, Eddie. Thank you for having me. It's phenomenal being here, and thank you for the opportunity, and I hope I helped your viewers as well.
My pleasure.